everything, now this is rare. Even in the Great Depression, the 29 to 32 crash, this didn't happen. Real estate reacted differently than stocks, and commodities crashed way before. Everything's going to go on sale. This will be the last bubble from my point of view. The final bubble in all these bubbles will be the treasury bonds, the safe haven that go when the bubble crashes. I got criticized for being too bullish. Now I'm getting criticized for being too bearish. So what can I say?
In today's video, Harry Dent, author of 0 Hour, discusses what's up with bonds, the next moves of the Fed, the raging inflation, and the coming recession. Before listening to him, please ensure to smash the like button and subscribe to the channel.
I was the guy that was most bullish in the 80s when everybody thought this boom would never last and said it was going to be the greatest boom in history. I got criticized for being too bullish. Now I'm getting criticized for being too bearish. So what can I say? Last time I was almost alone predicting the bubble would burst. And now there are substantial other people, and this same group was saying the overall market could be down 20%. I see more than that, okay? The last crash was 34%. That's the biggest crash we've had in history, modern history, in housing in the US. This one should take us back just to those 2012 lows. That's all we're doing with a second bubble, just back to those previous lows. But that would be 50% for the average house. And of course, so less in like the Midwest and places like that and parts of the Southeast, but more in places like the ones they're mentioning. Of course, California, Arizona, Austin, those are the biggest bubbles, the West Coast and Austin and places like that, and Phoenix. That's where baby boomers are moving, Sun Belt and everybody. And so, yes, but don't expect this. Everybody's now admitting we're going to have a housing correction, but they're saying it will be mild. When people, they don't say it's going to happen, then they finally admit, well, yes, but it'll be mild. Don't listen to these people, because all they do is follow the trend. When it's up, they say it'll hold up. When it's down, well, it'll be down a little. This is going to be the biggest crash in housing of our lifetime, and then we'll probably never see one again for decades. Housing does not crash as often as stocks, but these were two housing bubbles, rare in history, and the last one burst, and this one will burst the same.
So, Harry, for the people at home who are maybe thinking of buying their first home, you'd say no way right now, regardless of where you're at?
Yeah, they're already be saying, okay, now is the time to buy. No, when we get back to where housing prices were in 2012 or so that's a good way. Housing prices have been very different. Unlike stocks, they're different in different areas. So it's best to target the lows. So whatever the house or market you're looking at, what would that house been in mid 2012 around the last bottom? That's the best time to buy. When you see housing prices get there, and I don't expect that until at least 2024 sometime.
About the recession, but I believe your thesis is that the recession already started way back.
Well, yeah. I mean, this recession naturally would have been from 2020 into 22 by the demographics that I track. But the government, since 2009, it's just been stimulating. Things slow down, they stimulate more. So they've basically taken over the economy, and they created this second bubble. This second bubble would not have happened if they had not gone to long-term zero interest rates and made housing just a slam dunk to buy and make it irresistible. So they created the bubble, and now they're going to fight it. But I'm saying yes, that it did finally break, and once you break a certain amount, especially I'm looking at stock, and I tell people looking at housing, use the stock market as your leading indicator, okay? Stocks cracked first. They've tried to stop that bubble from bursting. Well, once stocks cracked over 30% in 2022, which they did, 34% on the NASDAQ, now more recently down 38, and about as soon as we go to new lows, it's gonna crash again. The more stocks crash, the more housing's gonna follow. I say the stocks are getting ready to crash for a second time. You want to sell your house before that happens, because that's going to be alert for everybody. So really housing, you shouldn't wait at this point, because housing takes longer to crack, but it also takes longer to sell and freezes up very quickly.
there's different definitions or interpretations of what you want to call a crash, but we didn't see a crash of the S&P in 2022 per se. What do you say to them, and what's your take on stocks and crash?
Wait a minute. No, we did. The S&P went down over 20, I think 5%. The NASDAQ went down 38%. It worse. So we did see a crash. Now you have to understand, and people in my newsletter know this, I've spelled this thing out in detail, and I'm just going on past crashes like 2000, 2002, 29 to 32. It takes 3 waves down to complete a major bull market or a major bear market. All we've seen is that first crash, and my indicators show us we've already begun the second wave down since mid-August, but it has to make new lows to accelerate and go a good bit lower. If that happens, that's only the second wave, and then further down, say in the next year or so, into 2024, we'll get a final wave down. So you can't feel like this thing's over normally until you see 3 healthy waves down, and we've only seen the first. So this is not a buying opportunity in stocks, and if it's not a buying opportunity in stocks, it definitely is not in housing. And you'll have plenty of time for buy opportunity in the house. Housing took years to turn around. Stocks bottomed last time, in early 2009. Housing didn't bottom until mid 2012, 3 years later. So housing, you'll have plenty of time, but stocks, you're going to want to get back in. Probably, again, if I had to tell people, if I had to say, I have to tell you today when to buy stocks and I know nothing else, I would say around summer, July 2024. That's when I would expect a bottom.
Well, let's get your thoughts on Bitcoin. I mean, it's getting some breathing room and renewed interest here as we start the year.
Yeah, again, same thing. Bitcoin is ahead of stocks and will probably bottom before stocks, maybe late in 2023, where stocks might be mid 2024, because it's kind of the leading sector. It goes up more, it goes down more. It's already been down 70% when stocks were down 34 to 38 on the NASDAQ and 25 to 27 on the S&P. I am predicting that, and I'm just following the same bubbles in Amazon and .coms. I'm telling you the same exact proportions, the bubble and the burst in the .coms is now 22 years later, that crypto will bottom around its late 2018, early 2019 lows around 3,250 to 4,000. So it's still, even at 16,000, down 70%, it will be down 95% if we do the same thing we did with the .coms. So it's not time to buy crypto later, but I also advise crypto is the next big thing. The .coms were the next big thing emerging in the late 90s in that bubble. They were small. The shakeout, which is necessary, Dan, this is a good thing. You have tons of new entrants, and then you shake them out to the ones that are really strong and have their stuff together. That's what the shakeout's for. That's what happened, back in 2000, 2002. And then you see the real boom, okay? So the best companies will survive. We have 40,000 coins by some count. This is ridiculous. All they are is cheap IPOs. Coins are cheap IPOs. The blockchain technology is real and will emerge after we wipe out all these ridiculous coin companies.
Are there any that
Bitcoin will survive.
Eyeing?
Ethereum will survive. Most of these companies will not survive.
If you were to, place a bet on some of these, what would you be looking to buy?
I would be looking to buy the leaders, Bitcoin, Ethereum, companies like that at the bottom. And I'm not looking for a bottom until we retest those lows in late 2019. That's also an Elliott wave count. That was simply a huge bubble. It was simply the 4th wave correction before the 5th wave final bubble. All we're doing, and this happens in bubbles. I've now studied since these bubbles came, all bubbles in history. Bubbles basically go back to where they started. They bubble up way beyond the fundamentals, crazy, and then they go back to where they started. That is 3,250 to 4,300 on Bitcoin. That's where it should go. Then you buy, because it could go, it literally, the projections also tracking the dot-com bubble before the real boom. It could Bitcoin could go to 500,000 to 1 million. My actual target right now today is the next boom will take it to a peak of 780,000. It is good to go with a bubble. And this is the second bubble, and it's actually the thing I'm telling people, it's actually tracing at a higher level the first bubble, and basically it peaked right in line with where the first bubble peaked after going up for about 5 years. So that was a good time to get out. Okay, so that would have been the best thing. You might have gotten out at 50 before, or 69 at the top, or you might have gotten out at 45 afterward. But anywhere there is going to look good when it ends up back where it started at 32.50 or so.
Looking at the technicals of gold, many feeling this is
the
year of gold. Have you had
history.
any change? Have you had a change? I guess you haven't had a change of heart when it comes to gold price.
Okay, what's the best analogy for this? 2008 was the first bubble and the first burst, and it did not go through like 29 to 32. It didn't erase the full bubble. Government stepped in and stimulated extremely hard and did it for 13 years until recently, okay? So they stopped the bubble from bursting, okay? So we have to go back and wipe out this bubble. Bubbles are not bad. They basically help launch a new sector and raise a lot of money for a lot of new companies. The point is, though, all those new companies can't make it. You have to shake them out. So this shakeout stage, which we're in and we'll be in for a few years, is important also. So you have to buy the winners at the bottom. And I'm going to tell you, Bitcoin's going to survive this. Ethereum, many companies, there might be 10 or 12 really solid companies that are going to survive this thing and have an incredible boom for the next 15 years. And that's what the dot-coms did. But most of those dot-coms, remember how many dot-coms there were? There was a dot-com for every name in retail possible. Dog.com, cat.com, whatever. And they all went under except the best ones. And the best ones then changed the economy. We're all online now. It's a giant industry now. So this is the way the economy works. There's nothing wrong with it. When people say this can't happen or not, they haven't studied history. I'm just looking at exactly what happened in the last bubble. And this has now clearly been a bubble of similar magnitude. Why would you expect anything else other than a 95% crash? Because that's what happened last time, including the leaders like Amazon.
How can you figure out which ones have a long-term plan and this is just, a momentary downturn?
Well, this is not momentary. Everything's going down. Some companies just go down more than others. So the number one's the first sign. When we're getting towards a bottom here, let's say in mid-2024, and the NASDAQ is down enough to say we're near a bottom, like down 80 to 90% instead of 40 to 50 to 60, then you start like, okay, whichever company's held up the most. If a company, like say, is only down 80%, well, it did a lot better than the companies down 90. But you also always look for the companies with the strongest market share and dominant. Nobody is taking out Amazon, okay? Amazon is the biggest, most diversified retailer in all of history. It would have been the Sears of the 50s and 60s boom, okay? And so Amazon is going to survive. And for me, it's very simple. I'm not going to analyze 40,000 companies and down to the 1,000 that might survive this, or a couple hundred, and then pick the best one. That's too much work. I'm just going to buy the leaders and then look at how the stocks have performed on the way down to maybe refine that. But it can be that simple. But if somebody said, what do I do? Okay, I'm going to buy Ethereum and Bitcoin in early to mid 2024, or maybe late 2023, because I think if somebody said today you have to do it and can't change your mind, that would be what I'd say today. So just look at it and refine that in the future. But you don't have to be complicated about this. You can pick the best stocks. That's a lot of work. I'm looking at the whole world and all major sectors and countries. I don't have time to decide if Krypton is going to beat Bombaton, okay? I don't have time for that. Here's the best way to view it. Instead of the crash of our lifetime, look at it as the buying opportunity of your lifetime. Everything, now this is rare. Even in the Great Depression, the 29 to 32 crash, this didn't happen. Real estate reacted differently than stocks, and commodities crashed way before. Everything's going to go on sale. Commodities, gold, real estate, and all sectors, high and low, luxury, not, stocks, things that bubble. The greater the bubble, the greater the burst. So you can use that as a simple guide. all you do is get out of the way. Be safe. If you protect your money, okay, you're missing, well, maybe the markets claw back some and maybe this thing doesn't go as low as I think, but you're not going to miss a lot. If it keeps going down, everything's going to be on sale, and the only way to take advantage of that sale is to be liquid, to be in cash or high quality bonds that preserve your value or grow, and then you turn around. That's why I said, if these bonds do bubble, this will be the last bubble from my point of view. The final bubble in all these bubbles will be the treasury bonds, the safe haven that go when the bubble crashes. If those bubble, then you sell those and you convert those back into long-term growth assets like real estate and stocks, all the things we like to own long-term. So you just have to say, look, things bubbled up. It wasn't anybody's fault except for governments for overstimulating, but it wasn't any of our faults. Just note that when bubbles, look at bubbles. That's what I've done. I've done the research for you. This looks exactly like a bubble, quacks like a bubble, burst, bubbled up just like the last one from 95 to 2000, bursting just like the last one. And if it does, it's got a lot farther to go. Be safe, be liquid, and the world's your oyster just a year and a half from now, probably. A year and a half, if you just wait, everything's going to be on sale. And you know what? At that point, people will be too scared to buy. They're going to say, well, everything's going to hell. No, that's when the smart money buys. If you know it in advance, you can be the smart money. If you're reacting on the way down, and then you finally panic and sell half the way down, and then it crashes, you're all, shell-shocked. You're not going to even have the intelligence to buy when you have the sale of a lifetime in front of you. You'll never see stocks or real estate or anything you're in at these prices again, just like nobody saw them after 1932 to 33, ever again.